Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 Index. We'll look at the S&P 500 futures contract. And in the last update, we were rebounding from this old support zone here in the market. This bottom in cloud chart support zone came in as a nice little rebound trade, broke past the top end of the cloud, and then back in bullish territory since price actions above the cloud. Then only did we run into trouble at the front end cloud chart resistance. We can see the standard line of the cloud there becoming a resistance zone. Market reversed lower and then sliced through the bottom end of the turning line as well. That support level failed, and then sliced through this major support zone, this 3998 spot 50 support zone. Now this front end cloud chart support zone is a major support zone. If we lose support at this zone and go back into bearish territory on the daily, that will confirm the bear market rally once again. So the market's at a critical stage. It's a make or break week for the market to rebound from this support zone, or if the support is the resistance is holding here and support fails, then we're going back into bearish territory. Then we've got these bottom end cloud chart levels there as downside risk targets, that zone there, as well as this zone there, and then ultimately this bottom end cloud chart resistance zone, support zone there. So those are the downside risk targets on the daily Ichimoku cloud, but critical for the market to either rebound from this cloud chart support test, and if support fails, the outlook moves back into bearish territory. So we're absolutely at a critical stage for the S&P futures contract to rebound from this cluster of support. But the downside risk is then these bottom end old cloud chart support levels there and there. So these levels will be met if the market slices through there and support fails. Now let's just take a look at the individual time frames quickly. We've got the hourly Ichimoku here. Last couple of trades, we had a beautiful swing trade with this cloud chart cross there, then ran into resistance at the top end of the cloud, all resistance zone there. So that was the profit taking zone. Then generated a sell signal on the hourly, sliced through the cloud chart support levels, and now fighting for support here. And you can see, will this front end cloud chart support level come into play? Will we get a rebound there? But if not, then there's downside risk to this bottom end level here, that 3960. That's the downside risk target on the hourly. So that's quite a short-term swing trades. Looking at the 4-hour, we can see we had a beautiful rebound here from this 39. What's the low there? 3925 zone. Rallied, broke through the cloud chart resistance, met resistance at the top end of the cloud. Old cloud chart resistance levels came into play. You can see that line there across there came into play. Let's just draw a line there. So the top end cloud chart resistance came into play. Market reversed lower, sold off to the bottom end of the cloud. So that was another swing trade to the downside. Now fighting for support here within the cloud. Now the key level to watch out for on the 4-hour chart is this bottom end cloud chart support level. As long as the market stays above this 3965 zone, let me just move that up a little bit. 3965 zone. 3966. So this is a key support zone to watch out for. If we fail through that level, then the market's going to retest these lows here at 3920 on the 4-hour Ichimoku cloud. You can see there's other zones there to the downside. This level here, which is another major support zone to be tested. There we go, 3930, 3928 basically. There we go. There we go, 3927. And then ultimately the other level to watch out for is this level here to the downside. So these are the downside risk targets on the 4-hour. It's 3927 and 380.888. These are the downside risk targets if support fails to come in at this bottom end cloud chart level. So if the market sells off through this level, the outlook will change back to bearish since price action is below the bottom end of the cloud. So that's the outlook, and that would open short positions to the downside on that level. Turning to the daily, we've covered the daily. It's critical for a weekly daily rebound here from this support zone. The market is dangerously close, moving back into bearish territory on the daily. Now the weekly, we're still in bearish territory because price action is below the cloud. The key levels to watch out for on this chart is the support zone here at the front end of the cloud, the bottom end of the cloud, 3886, and that coincides very well with the standard line 3871 support zone. So these are the downside risk targets on the weekly, 3886 and 3871 to the downside. Price action still below the bottom end of the cloud. We are bearish for the last couple of weeks now on the weekly Ichimoku. For the market to be bullish on the weekly Ichimoku cloud, we really need to be back above this line, or the best part is to be well clear of the cloud. So that's bullish territory. This is bearish territory. So bearish on the weekly, looking for a rebound on the daily as testing support at the front end of the cloud. So it can change to bearish if support fails. So watch out for that. We need to see a stronger rebound here. If support fails, then we're going back down to these bottom end targets there on the daily. 4-hour chart also looking to for a support here at the bottom end of the cloud, potential rebound there. If support fails, that would activate these downside risk targets. And then once again, the hourly one, we're already in bearish territory there, but looking for a potential rebound from this front end cloud chart support level. If support fails, then we're looking at these other downside levels to the bottom end of the cloud on the hourly. So these are the downside risk targets there on the hourly chart. So until next time, happy cloud chart trading. Bye for now.